Economist Kelvin Chisanga has described Zambia's Eurobond Buyback initiative as a strategic financial move aimed at reducing the country's debt servicing costs and strengthening public finances. Mr. Chisanga says the government's decision to use cheaper financing from the Africa Development Bank to buy back part of its commercial Eurobond debt will help lower future interest payments and ease pressure on the national budget. He notes that the savings generated from reduced debt servicing costs could create additional fiscal space for investment in key sectors such as health, education, agriculture and infrastructure. Mr. Chisanga has further stated that the initiative will support the National Grid Resilience Program, which is designed to improve the country's electricity network and ensure a more reliable power supply. According to The Economist, improved electricity infrastructure has the potential to boost business activity, attract investment and accelerate economic growth. He added that the Eurobond buyback demonstrates Zambia's transition from debt restructuring to more proactive debt management measures focused on reducing borrowing costs while supporting long-term development. And Mr. Chisanga says if successfully implemented, the initiative will strengthen Zambia's financial position and contribute to sustainable economic growth.
Zambia's debt complex matter has been one such big story which we have carried over time for some time now, especially at a point when we have been in the process of negotiation to a final, conclusive situation that we need to cultivate now. It's important to highlight that Zambia has launched a plan to pay back part of its $1.6 billion Eurobond debt. This program is strongly supported by the $600 million loan which will be accessed from the African Development Bank. The goal is to replace expensive debts with the cheaper financing model and further reduce the future interest payments which may be under obligation of repayment. Lower debt costs will create more room or breathing space in the national budget for some of the development aspects that we should be able to foster, and also much more to reach out with the public expectation in terms of public services. So the initiative is directly linked to a 15-year program to improve Zambia's electricity network. Creating a better electricity supply is something that is of essence, main essence to the core, to ensure that this is expected to actually be able to support businesses, investment and economic growth. Zambia's debt complex matter has been one such big story which we have carried over time for some time now, especially at a point when we have been in the process of negotiation to a final, conclusive situation that we need to cultivate now. It's important to highlight that Zambia has launched a plan to pay back part of its $1.6 billion Eurobond debt. This program is strongly supported by the $600 million loan which will be accessed from the African Development Bank. The goal is to replace expensive debts with the cheaper financing model and further reduce the future interest payments which may be under obligation of repayment. Lower debt costs will create more room or breathing space.
Right, and that is all that we had for you on Business on Sets this morning. We move on to Business 360, and joining me on Business 360 is Mr. Kelvin Chisanga. He joins me via call to talk about Zambia's Eurobond buyback. And Zambia's Eurobond buyback is a debt management move that is set to reduce long-term repayment costs after the 2020 default and the 2024 restructuring. And in September 2025, Zambia launched a cash tender offer to buy back up to 1.36 billion US dollars of its Eurobond due in 2053. That is a conversation that we delve into this morning with Mr. Kelvin Chisanga. Mr. Sanga, good morning. How are you doing?
So much.
Thank you for joining us this morning on the Business Day via call, Mr. Sanga. Let's just get to analyze what Zambia's Eurobond buyback is all about.
Thank you so much, Larissa, to be given this opportunity. Yes, just in line with what you have asked me, Zambia recently made a decision to launch a payback of part of its Eurobond, which is amounting to about 1.13 billion US dollars Eurobond, which is due in 2053. Okay, yes, this has generated a number of considerable public interest, which I should be able now to mention to say that this is basically going to help us lower the cost of repayment. Of course, understanding that the dismissal of this transaction will be able to work out in the best way for Zambia. Especially when you look at the way Zambia has been trending with the Eurobond aspect. Zambia, we understand that Zambia's Eurobond package is almost around 3.8 billion. If we compare with the interest payments which are also accrued from there. So what we're trying to do is that we started just with the external debts in the case of maybe multilateral and bilateral, which we have negotiated to a point where we have made substantial progress, where we're talking of 94% of debt restructuring processing from that basis. Now with the Eurobond, it has not been able to work out in a perfect way. So the gist of the matter here is that we're trying to remove our expensive debts. Although I may be able to cite here so that Eurobonds are capital market instruments, so they are higher and commercial, appeal in terms of interest rates. So what we're trying to do is we're trying to contract 600 million US dollars from African Development Bank, which actually which in any case is coming in the form of non-concessional firm terms. And now where we're going to some forms of trying to remove those expensive debts, now bringing back the aspect of concessional conditions. So in a simple term, or in a layman language, I may be able to say that we are trying to remove ourselves from high loans which were slightly over 8% to something that is almost like 0 or up to somewhere like 4 or 5%. So we are basically trying to remove ourselves from high payments in terms of payment obligations to some levels where we've got enough space for us to build up some of the infrastructure like energy. Like in the case of what we're trying to do, we are basically centering our focus on a 15-year energy resilient grid, which will be able to help, take up a number of activities from there. Meaning we can basically expand our tax base, we can expand our employment opportunity, and many other business activities from there. So this is what started playing out from there.
All right. Maybe just for all of us to understand, Mr. Sanga, what is a Eurobond? Maybe define what a Eurobond is, and I think that is where we should have begun our conversation from.
Thank you so much that you have even brought me to this case. I think this is an important question, and I really appreciate that you have brought it at this particular point because it has been a confusing and complex word. Eurobond is an international bond issued by a government in a foreign currency and sold to investors in a global financial market. What I'm able to say is that the way we play out with our local bonds, where people buy bonds in governments, treasury and all that. So this is what actually happens in the same with the Eurobond in the global market, where we buy these bonds, in foreign currency. Like we have dollar-denominated Eurobonds, which are underplaying right now. Zambia went into bandwagon to contract these Eurobonds between 2012 and 2015, of which it actually issued 3 Eurobonds worth about $3 billion US. So the main objective of these bonds were to finance infrastructure projects, which included roads, which we saw during the projects and other developmental initiatives that actually were undertaken. Much of what happened also is that we had a combination of other loans which were also, contracted as well. So in the context of Zambia's situation, for one to understand, we went to contract it from different sources, IMF, we went to the World Bank, we went to even other countries like India, France, Africa, and all that. So to categorize everything, we borrowed from Eurobonds, we borrowed from non-concessional, we borrowed also from concessional. And we also now went into some private-public partnership schemes as well. So all these were models of borrowing. So now, with the case which is happening right now, after restructuring, as we tend to restructure some of these loans, we could not touch on some of the tenancy or very hostile kind of loans that we have, like the Eurobonds, which demand the commercial appeal. So that's the reason why we seem now to restructure and reprofile some of these loans. So it's not like you've got that bigger commercial loan where you go and borrow from your neighbor who is offering you 2%, than the other neighbor who has always been offering you 10%. So you can borrow from that neighbor who's offering you small or very little interest to pay off the higher interest neighbor. So meaning you have more time to actually interplay with your activities so that you can make up to pay the other one who has been so lenient on your side. That is the case which is happening right now with the Eurobonds. We are basically trying to offset that higher commercial appeal by going to some sort of an NGO, because the African Development Bank is more like an NGO which is looking at financing Africans' development agenda, where they do not have so much to actually appeal for commercial, nature. So what is basically now saying that the African Development Bank, after placing that $600 million to enable us to also do other things like the energy forecast, which we are basically looking at, when we are stable or sustainable in electricity supply, meaning we can trigger high level productivity, we can also do other activities that should be able to give birth to some positive development to Zambia, meaning we have high rate of employment, we have tax interplay working out from there, and many others. So in the end, we'll be able now to pay back that money. And mind you, when we go with the concession loans that we are basically now putting weight on, we will basically have much more monetary time to basically interplay, meaning it can even take about maybe maximum of about 30 years for us to start paying some of those debts. But with the Eurobond, maybe I should be able to say that we are likely to make the payment, which is actually due. But in the case where we are now, we are trying now to prolong that repayment stress, meaning we cannot be able to have time to work out with our economic turnover. Then we'll be able now to make the payment as when they fall due. So meaning we are giving space for us to do activities, which means we'll be able now to meet some of those obligations.
How best do you think this can be implemented?
Well, this is basically looking forward to be adding some strong bondholders participation. If we tend to successfully implement this, and of course supported with that because of enough bondholders in the market to participate at higher rate of maybe 5%, or even just slightly 75%, we may be able to see that easily the cost, meaning the operation can lower future loan servicing costs, meaning the cost factor will be able to have that predictable environment created from that basis, meaning even when it comes to the key macroeconomic element, will be stabilized and will create now government with greater flexibility to invest in healthy education, tourism, infrastructure, and many other growth enhancing sectors. So this obviously it should be viewed as an opportunity for Zambia to strategically work out a financial decision which will be lasting with its own impact, especially for the future generation of this country. Because we have actually been, look, it's a situation whereby you are talking of paying a debt in 2053. How would be honorable Zambians who are existing today? They will even be not in the old age. So we are simply pushing our debts to our grandchildren. So it should not happen like that. We should find a way we can moderate some of these things and cut the impact so that we can actually be able to grow this country. This country needs a lot of financial resources, and it requires that we need to be prudent with our public finances as well.
Just maybe some background, Mr. Sanga. Zambia defaulted on $3 billion of Eurobonds in November 2020. And after 3 years plus of talks under the G20 common framework, it restructured the debt in 2024 into new 2031 and 2053 bonds. So this buyback, Mr. Sanga, you're telling us that it gets the long-dated 2053 tranche that was created in that exchange.
Yes, so, following the default, Zambia entered into a lengthy debt restructuring, which you have seen, of course, involving a number of officials, commercial creditors, multilateral institutions, as well as bondholders. So some of the scoreline have actually been undertaken, except when you look at the G20 framework. We have seen that the objective has been quite straightforward to make Zambia debt more manageable. And this is a typical strategic financial decision which is actually coming also on the bond side, despite also having some levels of difficulties. Obviously, we can understand that Eurobonds have got a number of multiple players with it. So if we tend to have a situation where we can actually be able to make obligation more predictable, it can be able to help out. And what we are also hoping that if we have more participation into the bonds, meaning it will make cancellation of some of these bonds, meaning you can imagine when you cut half of the Euro bond, meaning we only remain with 1.5, 1.6 somewhere billion of Euro bonds. And again, this also brings about reduced cost in terms of debt repayment factors. So if we tend to restructure successfully, we actually extend the repayment period, and we'll also be able to have a better way we can restore debt sustainability model. And what we are also seeing working out in the case that the buying back of these bonds is basically just going to put Zambia, actually the central government, in a perfect way where we have actually been able to put a fixed rate toward this, meaning what we are seeking forward is to have that cost of maintaining the debt aspect, which will be able to also to create a very good setup structure going forward, meaning what we can actually be able to see that the issue of immediate pressure will be removed from there. The issue of debt future service costs will remain significantly light in shape. And what we can also see that Zambia will have an opportunity to retire part of the debt early than the way we are anticipating to see it from there.
Right. You center your submissions, Mr. Sanga, on the national grid, and you say that this initiative will support the national grid resilience program. Kindly elaborate.
Okay, so what makes this transaction with the African Development Bank particularly important is its innovation, its interlinking and connection it's making to the National Grid Resilient Program, which in any case is part of the arrangement that Zambia will implement a 15-year program to strengthen electricity distribution infrastructure. So what will be able to happen in the case that the program will aim to improve the ability of electricity supply factors from there. We understand that Zambia has been facing energy deficit. So targeting this vulnerable sector with an aspect of financial backup and other motivation kind of financing, this brings Zambia to that level of predictable environment because energy interplays across the sectors. So, obviously, what I'm trying to see is that we work into this infrastructure to reduce the transmission losses that we basically incur. And also support industrial growth from there, because if energy is constantly supplied, meaning we can learn economic factors to a fullest level or to the fullest capacity, and we'll be able now to have that industrial activities play out from there. And again, we enhance business productivity scale. Imagine you don't have power right now. You all be sitting around to wait for power, but if you have power, everyone is working, everyone is active. So that is the essence of what is happening with this facility.
So this is a long-term. Sorry to cut you. This is one of the long-term impacts of the Eurobond buyback.
Yes, the whole situation here is that we are transforming this transaction from a poorly structured kind of arrangement where we have been paying higher interest rates to a purely financial exercise, which will be linked to developmental initiative, where we are adding something that can actually be more predictable. Imagine we are pushing our children to pay the debts, but now we are pushing our children to be productive by having these facilities. Meaning, I don't know which side of the coin you can actually be able to go for. One which is requiring you to pay debt obligation, or the one which will require you to have stability in future. So this is where we're trying to work out, the model, meaning the economic benefit of this transaction will be able to implement the growthy fundamental aspect, meaning we are trying now to lay the base. It's like you as a parent, you are leaving a house for your children, or you as a parent, you are leaving in Congo for your children. So that is where we are. So getting into energy project, I think that is more justifiable. It's something that is very, very important to look at.
All right. What is the short-term impact of the Eurobond buyback?
Definitely, the short term here can be the aspect of difficult situation that we can face in regards to the demanding nature of what we are looking at, especially when we link it to the issues of repayment. Definitely, what we see as a short-term impact that it can create, it's on the social program. We can also look at the agriculture issues. We can look at the education aspect. We can look at the health issues, because we'll create a breathing space instead of us paying. It's like you're going to stop paying your interest or your repayment obligations, and with that now you can create more space for other things that you are basically focusing as priorities. It's not like over time, for a projected time of maybe up to 2053, you should be paying your interest all the time. So the budget square or the budget structure gets to be used with that. But now when you cancel by way of paying certain part of your loans, so that you start focusing on other loans which are much more cheaper, you create more space for other things, meaning we've got more breathing rooms for education, for health, even for other project infrastructure that need to be undertaken. Look, Zambia at the point where I've got a lot of poor roads in most of the residentials. We've got a lot of poor roads in some trunk roads, even feeder roads. So we need to push money into some of these projects that we're able to work out. When we work on feeder roads, we are linking into agriculture, which is actually also receiving positive development as we see this particular season where there is a bumper harvest. So we need good roads to avoid post-harvest losses that we incur. So roads are important projects that need to be undertaken from there. And the infrastructure is something that is very, very key for Zambia's development agenda.
Mr. Songa, in conclusion, you speak about if the initiative will be properly implemented, it will strengthen Zambia's financial position and contribute to sustainable economic growth. Maybe let me just have you conclude on that note.
Okay, so Zambia's Eurobond payback, it represents more than a debt transaction. Obviously, it's a strategic financial decision which is being implemented to make sure that this becomes an effort to strengthen public resource, meaning we are now reducing the future debt costs that should have accompanied there. And in the long run also we're supporting economic development, except when we're looking at energy project or energy development initiatives. So this basically reflects a transition which we have seen in the Zambian case, where we are coming from a debt crisis situation now to a debt management activities, where we are now being proactive by optimizing the opportunity that is being posed. So maybe just to make the whole point in conclusion is that Zambia is moving from high debts and expensive debt instruments to some relatively lower debts, meaning we are coming, maybe just to simplify explanation here, is that we are moving from Shylocks to a moderate NGO-like, loan giver. And that gives an opportunity for us to have more breathing space, meaning we have got moratorium to interplay with the activities so that we can actually be able to make good economic returns from there. So it's an important aspect. This should be viewed as a milestone which Zambia is underscoring, and expect that we have even done a larger part of restructuring, which is actually sitting at 94% of external debts. So the Eurobonds are quite very, very tense. We need to make sure that we also replan them quickly so that we do not have the overeating factors around this. And this is what is very important to the case right now, because if we do not put out the Eurobonds, I think we will not be able to say we have done the debt restructuring, because this is where it is actually eating so much with the appeal of commercial in nature.
Right. And I wanted to ask Mr. Sanga, sorry, before I let you go, are there any risks that are associated to this in an event that this is not properly implemented?
Okay, the risk factor is that if we do not restructure properly, this will not create a pathway for stronger sustainability in terms of physical, elements and consolidations. It will not be able to help us move forward as well, because this can also plug into sovereign lending capacity that Zambia is carrying. We need to reach a point where Zambia has got a debt carrying capacity which should be able to speak into investors, should be able to flow into this market and interplay from there, meaning we can have more activities that will also bridge issues to do with job creation, tax basket, and many others. So if we do not work out a model that can properly work in the case, we'll be able now to start going through the vicious circle of debt crisis, restructuring, and going back just like that. So that is not something that we should be able to encourage. Maybe we should see that this is successfully implemented, and it should be able to work as a public good in the case, because what will happen thereafter is that even whoever comes to emerging as electoral winner may be able to actually get it right from there if we tend to do all these factors from there. So it's important. In fact, for your own information, each and every party, as they are even doing campaigns right now, it's important to also ask them to say, how are you going to work out the debt issue? Because it's important also not to just be over-promising when you're not even collaborating the productive sense of promises that should be able to link to Zambia's debt sustainability. Because over-promising is what is causing the rare case of running deficit on most of our budget. So it's important, even the politicians, when they're doing an term without borrowing, it's important to look at that from that perspective.
All right. Mr. Sanga, thank you so much for joining me this morning on the Business Day. It's been a pleasure having you just analyze the Eurobond buyback. Thank you so much. Right, that is economist Kelvin Sanga joining me via call to analyze the Eurobond buyback and what this means for Zambia's economy, and of course just what this means for Zambia's debt. This is where we also come to the end of the Business Day on Millennium TV. Thank you for joining us and for tuning in this Tuesday morning. My name is Lovisa Chilufia.